Has the American consumer finally started to show signs of weakness? Well, according to the new Nike, earnings expectations are for higher markdowns, and they missed pretty hard. On top of that, we've got luxury markets. Things such as the Bloomberg Subdial Watch Index has started to drop again. Is this one of the precursors of a weakening consumer demand across the world? On top of all of this, we now have the GDP numbers, and they were super hot, leading to some massive increases across the last 24 hours in yields and forward curve expectations. We've almost got a new high now on inversion. Is that something we need to be concerned about? Today, we discuss it together, along with our thoughts on the S&P 500's move over the last 24 hours. Let's get into it. There's a lot to talk about. Well, welcome back, everybody, to the Daily Show where we talk about markets around the world. Of course, we'll be looking at stocks, commodities, and cryptos, macro, leading indicators, and the hottest charts are coming your way. If it's your first time here, welcome to the community. Subscribe and smash that like button. I'm sure you're going to find a lot of value in today's video. So let's get into it together. Where were the big runners of the last 24 hours and, in fact, the last week? Well, we've seen banks pick up massively, especially the regional banks, and we'll watch that a little bit later on. But this was because yields went up. That's usually a great sign for banks, and it's not so great a sign often for big technology stocks. And we saw basically a difference between the S&P 500, the Russell, and the NASDAQ over the last 24 hours. Energy was also up. That makes sense. Usually it does like a nice rate hike. And these are the things that are starting to potentially show their heads. We've also got a sentiment survey coming through, and it's another week of significant bullish action. The bears even dropped over the last week of news, even though we went for a sell-off. Now that's interesting. We've not seen this for a very long time. We actually had a weakness in the markets, yet the bears dropped overall. They went to neutral, and more people, of course, still piling into the bullish side sort of trades. Now, this is going to be important to note because when we look at options later on today's video, you'll notice that calls were up to 58% of what made up of the last 24 hours. Inversion before we get into the rest of it. So as we mentioned at the start of this video, we have a new high about to be formed from the US 2-year to the US 10-year. This basically means that the short date, that is the Federal Reserve's controlling this rate, is now going even higher compared to where the economy is expected to be over the 10 years. Now, because this inversion is here, it means usually the bonds market is significantly saying there is a recession. I will tell you, though, that we never usually see a recession until this turns back into and uninverts. Now, until that happens, you usually never see a recession getting called. So I will say that this doesn't mean a recession is here right now, but what it does mean is that rates are accelerating. Let's take a look at some of the forward rates together here, which is always an interesting discussion. And the first thing we need to talk about is September. So what is the expectation for September? We're at 5.3%. 88% of economists now believe that we're going to get a rate hike in July. That's going to push us up, and of course we're seeing that accordingly go into the forward yield rates. If you want to add them, use a code such as this. Make sure you select the forward yields, and you should really have this in a watch list on your charts if you can. December 2023, we now sit at 5.4% with the possibility of 2 rate hikes by the end of the year becoming a real thing that the market has found out. And all the time while this has been rising, markets have also been going up. Does that sound familiar? Well, if we go back over to the US 2-year and we take a look at similar times that this has happened, we can add the SPX onto the chart, and we can see that basically speaking, when we usually have acceleration in rates, there's often a little bit of a decline about to happen in markets. In fact, that's been one of the things that's really hallmarked the last year. It's all about acceleration, though. It's not just about, oh, rates are higher. It's about unpredictability. Remember, markets hate anything that they don't know. And more importantly, if they start to think, wow, this sticky inflation means higher rates for longer, but more importantly, potentially accelerating rates, that will scare the markets. Is it a catalyst ticking time bomb? Well, let us know in the comments down below, because it's certainly something that we are watching very closely here. But remember, acceleration will be key. You'll need to see rates continue their ramp up, and very, very quickly at that. Now, over on Twitter, let's take a look at what we've been finding in terms of the news. First up, we've of course got here over a share at FX Evolution. 88% of economists now believe there is a rate hike in July. And I also put a quick shout out to members of the community for some of their picks through our Monday streams. Now, if you're new here and you don't know, we do a pre-market, totally free stream to come and hang out as a community and take a look at the Monday Open. We cover stocks, commodities, and cryptos. More importantly, we asked the community recently for some of your top picks, and we got Intel, SoFi, PLTR, PayPal, and Snow all at lower levels than they currently were at, and with some pretty nice runs. Of course, there were a couple of bad ones as well, but I'd say overall, the community is pretty good at picking stock. And of course, we're great at working out some of those technical levels. Now, why is this important? Well, I wanted to mention that now you can go and post. I'll do this every single week over on Twitter, so follow us and make sure to put in some of your picks. Not only can you read through the comments there, but more importantly, we'll analyze those and see whether they make technical sense every single Monday. So make sure to get involved in the community and share that stuff. So we talked recently about JP Morgan's squeeze sentiment. We'll go through a couple of things here. We've seen a recent 99th percentile squeeze, and that usually tells us that we're at a period of consolidation in the markets or drop. Now, we are far away from the moving average, so that's something that's pretty important, and we need to always consider that. With Q3 also around the corner, equity risk premium, I believe, will become a discussion. Now, of course, Morgan Stanley's Mike Wilson has been going on about this for a long time, and it's just turned into a new low, I believe, over the last week. So basically, we are at a period of time where no one is considering anything to do with equity risk premium. And of course, that is something that's a little worrying when you've got inverted yields as much as you do. Are we seeing a midsummer rally? Well, at the moment, we've had a drop, which was here, into a follow-up bullish rally so far. And we've talked about the two key levels for the S&P. With the markets breaking through over the last 24 hours, could we be going for a 61.8 fib? It looks likely that's really the last level that the bears have any control at in these markets and is going to be very, very important. NASDAQ has more importantly already hit, and Russell 2000 has hit a very high extreme after the banks went ballistic, specifically regional banks, all the way back up. Let's take a look at July market performance. Here are the trading days if you're interested in having a look at how it performs. During pre-election years, July is historically a little weaker overall. You'll see often the turn happens around mid-month. So if we do go on for a rally, the S&P hits, let's say 4,500 to 4,530. Let's just say that's what happens. That would usually mark the beginning of what we call a 2 to 3 month decline that happens in pre-election years. Again, most things have been happening, such as the other years in terms of recovery, the midterm, obviously last year, one of the weakest periods, etc. How does this show up? Well, look at this. Pre-election years since 1950, you can see that the NASDAQ doesn't actually have the best track record. The other markets are a little bit stronger, and in general, July is still generally a positive month, so it's going to be hard to get a bear in here. But at this stage, we can see that we're at the key levels. Quick reminder, our competition for June is about to end. If you're interested, make sure to look at the description down below and, of course, click on those links. It's easy to enter. Name, email, that's all you've got to do. And you go in the prize to win a couple of our courses. Plus, if you get the first prize, I'll see you very soon in July mentoring. Fear and greed, what's going on there? Yeah, it's extreme greed. No surprise, just updating you here on this one. And it's the same as we've really seen. Let's now go take a look at the options market. What's going on in options world? Well, it was not really a very strong day in options. We saw some pickups in relative 90-day volume, but you'll notice over here on the left-hand side, there weren't any too bigger moves. Things like Micron were down pretty hard, and we did notice that, of course, banks in particular, regional banking, came back very strong after yields started to spike up. Nike also had a bad return, which after hours led into about a 4.5% decline, but most markets were kind of holding around firm. What's more important is we got 58% calls. So only 42% of the transactions were puts, and take a look at this volume. Terrible. Really low volume. 33 versus 39. That's now marking pretty much this entire rally having very low volumes on it. And I think that's something to keep in mind here. We're in summer, we're in low volumes, And I don't know if we're seeing the biggest players in the world placing tons of transactions at these points. We might have some more on that early next week as we implement a new tool here into the daily show. I think you guys are going to enjoy it. We're going to look into the deep dark pools of the market to make sure we can check out the volumes going on. Let's have a look at rotation over the last couple of days. It's been in basically one of the best sectors for rate hikes, which is energy. Now, we moved from our negative bias on energy a little while ago, back in May, end of May, into basically bullish neutral. And so far, that has been the way it's played out. I do think we'll turn back into negativity on energy soon, and same with metals, but it performs very well in rate hike environments. And you can see they were some of the two best strengths over the last 5 days. If we go to the 1 day, metals, bang. And on top of that, financials and energy, again, some of the materials as well. All of the ones that it really do well from a new rate hike cycle, or at least higher for longer. I'd say we're starting to see acceleration of rates. Next week early, we have the Reserve Bank of Australia coming out. If they do another rate hike, it almost pretty much, it doesn't guarantee, but it certainly does put in play the idea that every central bank around the world is just going to continue to rate hike due to the stickiness of the inflation. And I think that's something that the market may not be taking into consideration yet. But hey, we'll check it out very soon. So just before we jump into the charts and we take a look at all of the key levels that we should be watching right now, and there are some really big ones, I want to talk about a stock that is potentially undervalued right now based on 12-month targets. One of the ways we're going to do that is by taking a look at the platform, which is Tiger Brokers. And of course, they're sponsoring today's video, so thank you very much to them. Now, zero fees, zero worries. If you're from New Zealand, Tiger Brokers is opening up with a bang over there, and they are not only offering FX Evolution community members an additional $50 of Microsoft stock by linking the description down below, but also you'll get zero transaction fees up to 4 times for US and AU shares every month. Now, if you're from somewhere else around the world, don't worry. There's a bunch of special offers for you in the links in the description. But I want to talk a little bit about the platform and some of the extra features. Not only can you get level 1 and level 2 data, but we can also get something to do with the stocks that used to be mostly in Bloomberg terminals, Reuters, and really paid services. So we're looking at Google here today, and many of you would know that this got downgraded the other day by some of the big kind of economists out there. But realistically, analyst price targets still remain very bullish over the next 12 months over 43 analysts. Now, this is something we can look at in the platform. It offers an upside of 11.48% according to this. And one of the things I really like that they've added as an additional is the historical forecast comparison. So we can see the stock has been trading basically below its overall analyst expectations for a while, and it's still trading underneath. But what this can do is it can give you a yardstick of whether a stock is potentially cheap or not cheap based on the fundamentals. Do you have to do anything? No. You let the boffins work it out for you. There's 43 boffins working on it. And while they update every single time at the updates have come out for, of course, economic news, you'll be able to then ascertain whether the technicals are making sense. If you see Google go down to the lows, they remain still very bullish, and you see a turn, then that V-shaped turn could be a buy. Check them out, links in the description down below, and of course, start using some of these features. It's a great way to build confluence in your trading and investing. All right, let's jump into the charts and let's take a look here at one of our favorites, which is Magma. Of course, this is the big tech stocks leading the charge at the moment. We're still pretty far away from the 20 moving average. I think it's like 12, 15%. And did we see any weakness over the last 24 hours? Not really. Effectively, it was just kind of like long leg dojing, flatlining through the middle. Not much to really report there. When we take a look at the VVIX, you can see here the volatility of the volatility dropped. So again, not really showing us much complacency. This rally hasn't really brought much volatility in it. So again, is this a dead cat bounce or something in this 3% or 2.5% kind of drop off? We don't know yet. But that is something we're looking at. Skew has increased. Again, it got crushed. So that's usually a pretty good sign of consolidation or weakness in the markets. PCC sitting around the lows, pretty normal, just showing us that there's still a ton of calls going into the markets. And of course, then we want to be looking at central bank liquidity. Now, I did have a misprint on this over the last 24 hours, so I apologize for that. It showed like a huge increase. I've now rectified the issue. And actually what has happened with the data is we've actually seen a bit of a drop off. So yes, that one was a mistake. And sorry about that one, guys. I actually thought it went full acceleration style, but it was just a bad bit of information coming out. Now, overall, what does this mean? Well, again, we just keep continuing on a huge discrepancy between central bank liquidity over the world. And I've added in both of them now. So both the Fed and the central banks of the world as a combo. And you can see here we are very far away from it. Is this a time to be concerned? I would argue as a swing trader, yes. I would argue as a day trader, you wouldn't care. And of course, as an investor, I would say it's a cautious period. Looking for mean reversion is usually a pretty good sign for investors. And as we mentioned in the last video, we're in the 85th percentile of trades. So what that means is that we have now not seen a sell-off of 3% in so long that we've entered into not the twilight zone, but certainly one of the periods. There was one, I think it went for like 300 days, but we're certainly going into a period where you'd usually see pullbacks over the next coming months of at least 3%, if not 5%, if not even a bit more. Let's move over to copper. Copper's continuing to show some kind of demand destruction. Usually you'd expect copper to do okay based on rate hikes, but at the same time, it didn't. So that could be showing us something underneath the hood of some form of sickness. As we mentioned, rate hikes are the key here to the last 24 hours. Dollar has been bulling. This has been our position of the week. We really believe that dollar would find super strength off this zone. It did, and it's moving back to now fill the gap. So you can see up at about 103.25, we have a gap fill. It's going to be a super important zone here for the US dollar, and we'll be watching it like a hawk to see how it interacts with that, because this is really where the market broke down before. So as the US dollar comes into here, you'll notice I've got 103.50 as well. This all is basically supply. So the US dollar, I expect to find further bullishness. I'd like it to go into this zone, and then we'll find out whether it does actually place a turn. This will be to do with acceleration of yields, I'm pretty sure. Remember, at the moment, the US dollar is pretty attractive to own in comparison to some other currencies. And it's also potentially more attractive than gold because I can get, some money in the bank if I put my US dollars in a term deposit or something similar. Speaking of gold, we come in here, we held the daily level, we held the 61.8 fib, we rejected it. No signs of real turn here. Let's go down to the small time frames. We'll go 2 hour first. You can see we're kind of hovering around here. I would put in I would actually go for this, but basically if you're wanting to be a bull here on gold, you need this blue level to be taken out, 1917, and then pullback should be met by buy demand, at least temporarily, back into some of our major sell zones. But at this stage, it's basically just sitting around demand. We don't know whether it's going to find strong buyers yet. It found one day, didn't find any momentum just yet in that. Let's move over now to Tesla. Tesla made a long leg doji. You can see here a high, a low, and open and close. Indecision at this point. Overall, of course, we have a key potential turn zone here for the market to give back some of its massive run. It's been up since I think about 60, 70% since we saw a last turn point. But recently, we did get it when we fell below those lows. And I think that's something that we want to be focused on here. It's the first time we've seen any turns across any of these markets since the breakouts. NASDAQ, S&P, Russell, and of course, some of the major stocks such as Tesla. We haven't seen it in some of the ones that you usually would bring the market down. Apple, Microsoft, Meta, they haven't shown it. And that, I think, also leads into semiconductors. Have they shown turn? The answer is no. The strongest market participants have not shown weakness. Speaking of some weakness, we continue to see defensives being really lackluster in this rally. Usually you'd hope the defensives would actually rally with the markets so that you could see that the markets were going defensive. They haven't been doing so, and I think that is a worry for bears for sure. This is something that's pretty consistent. It's not the absolute, but it's pretty consistent, and I would like to see defensives find some buyers over the next couple of sessions. If they don't, then we could literally be going to 45.30. It's very possible, especially if we break some zones we'll look at soon. For the ASX 200, we just took a new little low in the futures market here. It's at resistance. It's waiting for what I would say is probably the US lead. So I wouldn't expect too much from the Australian market over this particular trade period. Let's see how the US goes after the core PCE comes out. For the European market, the DAX still hovering around a pretty boring zone. We'll update if that gets interesting. And then we go over here to the US 2000. Now, this is where it blew past my expectations. I actually thought we'd hit this level here and find weakness. We went past and we got into my secondary fib zone. Interesting. There's no weakness here. And that's why sometimes I'll use smaller time frames. My thought process here was boom, boom, take the low, and then basically continue on for the weakness side here for the Russell. The yields just kept pushing every single financial up, and they were going ballistic through the session, and it pushed all the way up here into these high-end zones. Yeah, it's now or never for the bears on this one for sure. I mean, that's just the way you've got to look at it. The Dow, we can see where it's at. We can see a little bit of a rejection over the last 24 hours. The NASDAQ weakness overall here, obviously still coming off. Did we get a new low under 14,858? The answer is no. Have we turned towards the short? The answer is no. If we get underneath here, yeah. At this stage, bulls in command of this current rally. S&P coming up to the next gap fill. The next gap fill is 44.09, so basically 44.10. It rallied through. Again, it's not really looking very weak, is it? Look at this thing. It's coming in. It's coming into the zone. 44.10 seems to be what it wants. So I would say it at least tries to go for that. And did we see any major turns? No. The answer is we didn't get any major turns. We did not get under 43.61. So at the moment, the bulls still command this market until proven otherwise. I'm super interested to see what happens here, of course, because I do think mean reversion's overdue. However, we can't really deny that it wants probably its gap fill. If it gets it, and then it starts to sell off, well, we can say, all right, smiley face, I know what you're doing. But at this point, well, we're just basically going with that flow. And the flow changed, of course, once we breach through here, we usually move to the next level of equilibrium, which I believe would be 44.10. Let's have a look at the crypto market. It is boring. Is this distribution? Is this accumulation? We don't know yet. Bulls will be hoping so much to hold above those previous highs. If you do, it could be big, because as you know, the ratios are off. And last time we saw this, what happened was we basically had around a 6 to 8 month lag between the markets recovering hard and the Qs, and then Bitcoin going ballistic. It's also due for some interesting stuff in 2024 as we approach the halving cycle again. So yeah, Bitcoin fans could be feeling a little bit bullish here in their investment side. From a trader's perspective, though, hard to pick just yet. Let's move over now to some of the data that's coming out. And of course, we had the GDP numbers, which were pretty strong. Now we go forward to core PCE price index, which is at 8:30 a.m. on Friday, just before the market opens. The Fed usually looks at this number, so it may be important. Markets may move a little bit off it. It possibly could create spikes to key zones as well, 44.10 maybe. And then from that point, we're looking for some of those smaller areas to be, of course, broken below if we're going to be a bear. And if we're going to be a bull, well, you just really want this thing to high off. Once it takes the high, 45.30 is probably the next zone for the stock market. Difficult to really tell exactly who is going to control it, though, until we break some of those key zones. At the moment, I'd say the bulls are in command of the small timeframes. As always, if you haven't already, enter the competition. Links in the description down below today. And if you're interested in finding out more about the special offers of today's sponsor, Tiger Brokers, then you can link the pinned description or the description itself. Thanks so much for watching, everybody. We hope you have a great day. Have a great start to the weekend. Of course, we'll be coming back at you with a special episode, and we'll be looking into some dark pool volume as well. So I think a lot of you will enjoy that session. Stay tuned.